And hopefully you will find this not just enjoyable, but also informative. And therefore, please ask your questions. Write them up in a chat box, and we'd be happy to take that forward. And sorry, there was some question. And please ask the question.
Coming back.
Oh, there's an echo.
There's a lag.
Echo. There's a lag and an echo. For a minute, I was thinking, God, this sounds like a familiar voice. But
Anyone joined here for same meeting?
Has anyone joined here through your mobiles or?
No.
Maybe the audio system.
It's
Not log in. Thanks to you.
You should not log in from here.
none of them
Somebody.
logged in.
Only one. There's an extra speaker. If you log in through a mobile, it will.
Usually, we've not had this one, but especially in Kadum office. You think it's okay now? All right, I think we'll kick it off because in the interest of those who come in on time, I think it's only fair that we start. We also have time to ask more questions later. So I'll hand it over to Kanchan Dwivedi, who will kick off the session.
Thanks, Sandhya. So hi, everyone. Great to be here today. My name is Kanchan Dwivedi, and I'm the founder of Inspired, like Sandhya mentioned. And I'm a part of the TIE Fintech Committee of TIE Bengaluru. I welcome you all today to this session on exploring synergies between banks, fintechs, and also the opportunities around the cross-border opportunities in the financial ecosystem. To start with, I just also wanted to share, why Bengaluru, happens to take on such a, and especially TIE Bengaluru happens to take on such a focus on fintech, because though it's been sort of a year when the funding has had a drop of nearly 67% in terms of fintech funding. But still we are amongst the, the positive thing is we are amongst the top 3 countries across the world, still in terms of funding. But if you talk about funding with regard to the Indian cities, Bengaluru takes the cake with close to $900 million worth coming in at the top spot. And so, which is no wonder that we had TIE Bengaluru with our president, Madan Pariki, especially was talking to Sandhya Vasudevan, who heads the TIE Fintech SIG for TIE Bengaluru, to sort of take up, initiatives regarding that. And we have seen a slew of sessions this year, thanks to the leadership of Sandhya. So Sandhya, a bit about Sandhya is, okay, so very briefly, she's an amazing mentor. She's a startup advisor. Is a leading light in the fintech ecosystem. And so under the leadership of Sandhya, we've had a number of sessions like the founder focus sessions, sessions focused on regulatory concerns, then the basically the digital currency, and so on and so forth. We also have wonderful team at TIE Bengaluru with Vijayata Shastri, and a couple of others, including Vinay Dora, who are supporting us on a marketing front. I need to mention this because they are these strong pillars which have kept the the ecosystem going. So pretty critical to mention people like Suresh, Lakshmi as well. So by the way, not only do we have TIE Fintech, but we also have TIE Women, which is very important to me, which I'll also share with you as to why, part of it slightly later. But TIE Women, which is being led by Geeta Ramamurthy, is also very special to my heart. And TIE Bengaluru is heading many more such special interest groups besides the women as well as the fintech. And now, coming on to the basically the speakers of today's session. Very thankful to Yes Bank for for holding this session. Very important at this point in time, talking about fintechs, about the banking ecosystem, about the cross-border opportunities which are there. So today, if you're talking about cross-border opportunities, India happens to be the largest recipient of the payments coming into India, and the majority of these payments are coming in from US as well as UAE. And so which is why it is important, but yet there are so many areas of friction within this cross-border transaction which is happening. And apparently, if we take away even 5% of these the frictions which are happening, it'll add $16 billion to basically the ecosystem, which is being just taken away in terms of the high costs, slower speed, a lot of regulations around it. So this is a topic definitely that everybody would love to talk about. And so we have Sunil here, who has the ecosystem banking from the Yes Bank side. He has extensive experience and in banking. And he's the go-to person as far as banking, fintech, startups are concerned. And we also have Anirban from his team joining in person today. He will share with us about the trade as well as the forex part of it. And we are definitely missing Suresh Nanjappa because I think, thank you. He had some emergency because of which he's not able to be here. And then across the border, we have Sunil Rajappan, who joins us. Sunil happens to be this leader with 32 years of experience in banking. He has supported scaling up across, especially across technology sourcing, go-to-market with respect to technology. So he also advises the PE firms in terms of expansion across the world. So he has extensive experience, and we are very lucky to have him here today. So this is the Yes Bank team. And of course, we have a wonderful KDM team also, which I would also like to thank before handing it over to Sandhya. So just wanted to mention, on a personal front, I'd like to thank, Sanjeev for his leadership at KDM. Amazing team of Chetan, Gaurav, Siddharth, and, the rest of the folks, Kevin, Tarun. And now I would like to also, invite Sandhya to share a few more words about, what she thinks about KDM.
I think those of you who are not familiar with KDM is Karnataka Digital Economy Mission. It is actually very, very fascinating what we are up to. India's digital economy is roughly going to be about 1.2 trillion, and our aspiration is to have about 300 billion of that from Karnataka. So startups from Karnataka contributing a very hefty portion of that India's growth story. So what does it mean for us? So it means that within our environment, we tend to have many of these events, support the Elevate program, support a whole range of other initiatives. So fintech is one of the pillars that's a very strong pillar, and I believe the recent government is extremely committed to taking this journey forward. So you'll hear more about some of those initiatives in the future. The second bit, I think, which has been on the works for some time, is it's not enough for just Bangalore to grow. We need Bengaluru, Hubli, Dharwad, Mysore also to be effective. And from a fintech perspective, Bengaluru is the place where we kicked it off last year with actually Mr. Mahabaleshwar Rao, the MD of Karnataka Bank, taking a lead to kind of put a stake in the ground for that ecosystem to develop. So KDM is genuinely very, very keen on driving this agenda forward for the digitalization of India in the truest way and supporting the startup ecosystem. So in a funny way, I'm talking on behalf of our hosts who've given us this space, and we tend to use it as part of the partnership that we have at TIE. I think one of the things that when Kanchan was doing the introduction, I probably should emphasize that Sunil Rajappan is actually not part of the Yes Bank, but he's a very, very senior leader based out of the UK. And he comes with, as Kanchan said, over 32 years of experience in scaling technology in the financial sector. He's been part of the banking, capital markets, insurtech, and a whole host of other spaces. He focuses significantly on technology sourcing and go-to-market strategy. And he'll be providing a perspective from the UK. We also have a Yes Bank colleague who will be providing a perspective from the Middle East. So it's going to be cross-border embedded finance and conversations around how banks and fintechs, how do they engage with each other? So hopefully that should be interesting. Just to kind of close out the introduction, because he's on a virtual, he's joining us from the UK, but the rest of the Yes Bank team is here, and they will kind of tell a little more about themselves. But I think Sunil is also a non-exec director and an advisor to many fintechs. He has been, I'm just making sure that I cover all the points. He's also appointed as a member of Eminence and senior mentor at the Campus Angels, SSM Incubation Foundation, and several other universities. He's also an NLP speaker and ECB empaneled umpire and exec coach. So given that he is coming on later, I thought it was important to just provide his insights. Sorry, I haven't done that for the rest of you guys, but I think what we agree was as they talk about their areas, they will cover their introductions in more detail. So over to you, Sunil, to take this forward.
Yeah, thanks, Sandhya, and good evening to everybody in person and digitally joining us. Before we start our discussion, I just wanted to take a poll who all are here in this room. Those who are founders of fintechs, if you can just raise your hand. Okay, and others are you investors or are there any investors in this room? Not sure, not really.
There are a few, I guess. They may be a little shy to call
Technology. I'm from the technology.
Technology side of things. Okay. So any specific area? So while I will cover how a bank works with a fintech in terms of partnerships and what are the bank's perspectives on working with a specific startup or any area, any specific areas that you would want me to cover? Because we are from the bank side of things, and Sunil comes from the global and the industry standards across the world as well. So anything that you want specifically to be covered? Anybody?
MSMEs, you can throw some light on MSME lending.
Lending for MSMEs, okay?
Yeah.
Okay, anything else? Anybody?
Cybersecurity.
Cybersecurity. Okay.
Cross-border frauds, how do we handle making sure that not
Sure.
pretty exposed?
Sure.
Cross-border investments.
Investments outside India. Okay. Or coming inward. Okay.
Agriculture related.
Agri. Okay. So it's like covering different sectors as well, apart from the fintech side of things. Fine. I hope that covers most of it.
Can I also add probably what kind of fintech collaborations or stuff are happening with the Gift City specifically?
Yes. Yes. Sure. We have somebody joining.
Somebody.
Yeah.
Yeah. On specifically on IFC and
Gift City.
Gift City side.
Yeah.
Right. So just to introduce myself, I head the startup banking for Yes Bank. When I'm speaking, I'm not speaking only on behalf of Yes Bank. Please don't mistake me on that way, because as a bank, we have a few standards across the banking sector. How to, there are regulations from RBI. There are regulations which covers everyday working for a bank. And when we started working with fintechs, that got extended into technological solutioning through the platforms. But the regulations would have stayed around 60–70% the same. Some regulations would have got diluted in terms of technological use, etc. Because our regulator is quite proactive in that sense, and quite modern thinking in terms of what kind of business should be driven by fintechs and along with banks, etc. So a lot of direction has been given by the regulator. But while there are a few things which might not be explicitly shared by the regulator, we approach them on a case-to-case basis. Can we do this? Can we not do this, etc. And we go by those directions. So across banking, there is I wouldn't say a written rule, it's an unwritten rule. This is the way to work. Multiple banks have shown their interest in working with fintechs and startups as partners. While in their own journey, different banks are in different stages of evolution, and everybody will have their own niches. They will want to get into certain markets and not into certain markets, etc. So those kind of differences will be there between banks. But overall, what we are looking at is, for the last few years, I would say 7 years in the bank's existence with fintechs, there has been a lot of collaboration which has happened. So if I talk about banking, so we call it as banking as a service, distribution as a service, because banks come with a distribution scale across the country, across type A, B, C kind of cities or beyond that as well. So all these reach that the banks have is what the fintechs are also trying to collaborate with in terms of reaching out to more customers for their products, making products and solutions easier in terms of using collections and payments through different platforms, making more effective use of the infrastructure which is available as a bank, which has been invested. So as a genesis, banks started working with the partners as fintechs because banks did not want to do so many things, because we have invested infrastructure for IT. To change it or to fine tune it, it's expensive stuff. Unless there is quite a big business case, banks will not want to invest so much into that. So that is why most of the banks started engaging with fintechs and understanding what kind of partnerships can be done. It can be a new solution, new market, new product. What can be the partnership is something which is up to the banks to do. So we as a bank or as an industry, in the last 2-3 years, we have seen at least around 50-60 integrations, which are quite strong in the market. What we are looking at is looking for partnerships which are going to be sustainable. Brands or the platforms which are available are going to be long-standing. We are not really keen to connect with people who might not have a very strong idea in terms of scale, because banks always work on a scale. There are millions of customers being serviced on a daily basis. So any solution which a bank partners with fintechs or any startup for that matter will be through scale approach. Secondly, the approach will be in terms of the business continuity, because banks have a brand name to protect on their own. If the partnership with a specific entity is not going to be sustainable beyond a point, that is a big red flag for any institution like a bank to enter. So those kind of partnerships will be looked at maybe for the next 5 years, 7 years kind of a horizon, and with scale of operation as well. So that is how most of the banks look at any partnership. So while we are one of the players, or one of the key players who are tech-enabled and providing a lot of digitization in the market, we get a lot of applications from the fintechs on a regular basis saying that this is the lending space, digital lending space where we want to partner with the bank. There are certain areas where banks want to get into. So for example, if you look at UPI for a product, wherein most of us are aware that India is digitized mostly through UPI these days. It's going global as well in multiple geographies within the Asia Pacific, etc. So if you look at even Indian market itself, there is big players like PhonePe, Google Pay, many players are there like that, Bharat Pay, etc. So they've captured a certain amount of market. Still, if you are a player like that, and if you approach a bank through NPCI as well, you might end up getting an approval for the license because of the fact that the market is still not penetrated enough. We have scratched only the surface or a little bit more than that, because one of the players which we are working with is specifically working on Northeast as a geography. Northeast is I don't know how many of you are from Northeast as such, but it's a very difficult market to penetrate into because of the terrain, language, multiple reasons of that. So when this particular fintech approached the regulator, they readily got an approval from them. Another player got an approval basis the fact that their reach is already there in the rural markets. So we are still a growing economy in terms of digital penetration for sure. And these kind of partnerships will make a lot of sense between a bank and a fintech in terms of getting more deeper into the market, more digitization for the customers. And of course, it's a win-win for the platform as well as the bank. That's one of the things. And in terms of other sectors, like somebody was asking about agri-tech, somebody was asking about MSME, you were asking about MSME. So these are areas where digitization is happening a lot through fintech partnerships. Agri-tech specifically, we are seeing a lot of interest from the customers, sourcing of customers through platforms. So even MSME is also very similar to that. There are, although we are present as a bank, we would be present in certain cities. There are markets which are unserved by the banks, any of the banks as such, because of the non-physical presence. Unless you have a physical branch presence in a certain location, it is not easy to service those customers. Banks will want to connect with fintechs who are having this kind of a digital approach, or through network of business correspondent, banking correspondents, we call it. There are, network of mom and pop shops or courier offices in different small nooks and crannies of the country, which are empaneled with certain banks, saying that I can service most of the banking services through my, computer. So those kind of licenses are agreed upon between banks and fintechs. Those who are digitally strong in terms of lending, we are doing those kind of partnerships in terms of identifying customers in remote areas, so, identifying their credit scores, making sure that the credit or the collateral-based approach is also available out there to lend to those customers. So in terms of agri customers as well as MSME customers, we are doing a lot of digitization as such. So these are a few initiatives which we have seen in the past. One more initiative which we can see in the banking space is that it's a go-to-market strategy which some of the banks have adopted, wherein creating a platform wherein if I'm a bank, I am creating 5 partnerships with fintechs and non-fintechs. We should try to showcase these solutions to our own customers. For example, if we have thousands of salespeople on the feet on street kind of salespeople in the bank, they do sell certain products as a part of the portfolio of the bank. We have digital platforms wherein our SME, non-SME customers, corporate customers also can come on board and avail of services which are offered by fintechs and other players through Aadhaar OTP and digital onboarding totally. So these are new trends which are happening effectively, and we can see thousands of customers getting onboarded on these platforms. And like I said, some of the dilutions have happened from the regulator in terms of getting a wet signature from each and every customer that we onboard. There are certain areas where we are authorized to, onboard certain customers through Aadhaar OTP and other. So there could be a fully digital journey. There could be a phygital journey in the sense that somebody expresses interest and parks the request with the platform, and there is a physical process to follow in certain cases where the documentation is 100% compulsory as such. So these are a few trends which have happened in the recent past. Going forward, we are looking at more and more partnerships. So I think my next speaker after me will be talking about embedded banking, etc. So these are the trends which are catching on quite well across banking. So till last year, I would say not more than half a dozen banks were involved in these kind of initiatives. Now you can see even PSU banks, private sector banks, so many banks are actually taking initiatives of having a startup specific cell, having initiatives in terms of partnerships with fintechs and startups. So everybody is realizing the power of digitization and the startups and fintechs in the space. So I'm sure going ahead, the times are exciting for this room and beyond, wherein we will see a lot of marquee deals or marquee partnerships happening. And we are as hungry as any other bank, or maybe more than that, to look at partnerships in terms of making sense for the customers at the end of the day, which is a win-win for everybody involved. So that's about it from my side. Any questions if you want to finish off in a couple of minutes? Otherwise, we can take it at the end of the session as well. Just one point, cross-border will be covered by one of my colleagues. I didn't cover that inside.
Export, import related.
Yeah, so we are having a session specifically on that.
You can hear everybody out and then ask questions.
Yeah. So yeah, I would request Sunil if you could come in.
I'm just getting my slides up. Let me know if you can see the slides.
Yeah, it is.
Yeah.
I put it in slideshow mode, so it's a little more better. Great. So I hope you can see the slides. And is my voice audible, clear?
Very much.
Yes.
Yeah. So thank you very much, Kanchan. Thank you very much, Sandhya, for the nice introduction. Thank you, the team there. I can visibly see everyone, but I don't know who's whom, other than Sanil and Anirban, whom I met, and Kanchan and Sandhya, whom I met. A warm welcome to all of you. Thank you very much for your time, and thank you for inviting me for this
Hello.
session.
Hello.
There's somebody saying hello there.
I think Kiran, you might need to mute your
I
speaker.
think Kiran needs to mute his. Yeah, he's done it. Okay, so coming back, I think today, it's a good leg on from where Sanil has covered. And Sanil, the first time I heard the word phygital, and I was very inquisitive to hear that word because you look at UK, US, Germany, everything is digital, but you will be surprised if I tell you there are still things that require physical signature. So a lot of people have this impression that India is a country. I know there's magnificent growth in fintechs. I'm on the board and advising several fintechs, like I said, in the incubation system at IIT Chennai and SSN University, etc. I'm seeing wonderful financial services startups who are not only working for social causes but getting finance to the urban and rural masses, exactly the way Sanil explained, in terms of, but I would be surprised, you'll be surprised to know that phygital is still happening in this part of the world. So it is not that it is only an India story. You will be surprised that many times what the media doesn't carry the stories, as you probably know, sometimes there are biases. So there are, sometimes you can be surprised if I just like last week went and remortgaged my lending for this place. And I was asked to come into the bank, physically sign a few documents. You'll be surprised. You'll be saying, what? I thought only India does it. No, it's a requirement. And I think some of the regulatory requirements are the ones. It's not the banks at fault. Some of the regulator wants some physical signatures and you have to view the person in person. Even if you go with your passport copy or your driving license, which is the equivalent for your Aadhaar in our country, in the UK, they want to physically match the photograph with you in person, etc., 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 etc. So I think phygital is going to live for some more time, is the way of what I wanted to tell. When people have this impression that fintech is going to change everything and everything is going to be digital. Yes, the endeavor is there, but it will take some time because of the regulator has to keep up with the changing needs of the banking ecosystem. So what I'm going to cover today is some of the context and trends, right in the way where Sanil explained. I'm not going to repeat what Sanil said in the amazing things that are happening in India in terms of rural, urban finance, integration with fintechs, and how you're reaching the masses, even in the Northeast, which is a place that people rarely used to go. In my times, 30 years ago, we would rarely even go beyond Calcutta upwards, and now people have reached that place. So it's great. So I think some of the trends here will be explained as we speak. Now, I think the context setting here for the set of context is that we move from the pandemic era. So this, I don't want to repeat what's on the slide, but just want to tell you that fintechs have moved, banks have moved ahead. Like Yes Bank has given a good example with Sanil, and I know Anirban is going to explain cross-border transactions. Everybody has moved the needle progressively. But there is still a lot of competition between fintechs and banks with regards to mind share of the customer, share of the wallet of the customer experience, digital product delivery. And I think that's where two things have helped. One is COVID. I know I should not be saying that, but people don't like when I say COVID was a good thing. But in COVID, you had a huge digital disruption, which brought people to think out of the box on how can I deliver a banking product, be it lending, be it unsecured lending like cards and payments to the customer without a physical involvement. That got accelerated during COVID. So that is one benefit of the COVID app. And second, the economic downturn, which happened in late 2022, early 23, with the collapse of SVB and Credit Suisse, etc., helped recalibrate the entire system in terms of the people who are going all over the place. Now you are able to bring it to one set of propositions, set of customer experiences, and set of beliefs. These two waves helped both the banks and the fintechs work together. Previously, they never worked together. They rarely worked together. Fintechs, of course, use the banks as customary vehicles to get their money done, get funding done, get salaries paid, but it was not seen as a collaborative entity to the customer. And that's changing. So if you look at this, exactly the trends I've mentioned here. So the trends on the slides are trends that I have talked with McKinsey, Everest, Bain, and others in UK, US, Germany, and France. A typical problem is that. So that means, but there has been good things happen. So everything is not so doom and gloom like the media would like to predict, with impending recession, market volatility, increase in interest rates. You open the newspaper, you hear these things. But actually speaking, there's a lot of funding still happening for fintechs. There may be fewer unicorns, but there's a lot of funding still happening. In terms of the last Q4 funding was 10.7 billion globally. So $10.7 billion were funded by VCs globally. Of course, if you compare it to the peak in 21, it was 36 billion, but that's okay. But still, there is funding available for good, reliable fintechs, which either are addressing a social cause or addressing a problem in the market. People are moving to B2B more than B2C. That's one trend. So people are moving up from B2C to B2B. They're focusing on embedded, and I'll come to that topic in a minute when I come to the embedded slide. People are moving to embedded finance because it's not just the banks and the fintechs who are going to do banking. As you must have heard the rumors, Apple, Facebook, Google are all planning to enter the financial services segment as a card provider, a payment provider, even an account. There's a rumor in the market that some of the big techs, we call it big techs, Apple, Facebook, may even start looking at digital banks where you could have your accounts without having to go to a banker. So even the big tech is jumping into what is called as banking and financial services. The third point is very important: operational efficiency. That's very important. A lot of money was spent. Like I said, 36 billion was spent in 2021, but people are not have the focus on top line is going. There's a lot of focus on bottom line. People want to know, you're going to have a new fintech. How are you making operationally efficient? Fourth one is a regulatory framework. As you have seen in India and I've seen in UK, a lot of regulatory framework is coming around how fintechs will operate, how banks will operate. And of course, there's a consistent user experience. There's more innovative. Now, banks are adopting the fintech model. Can you believe that? I have seen the UK Barclays, HSBC, and Lloyd's Bank have adopted the fintech model of operating. For example, they have taken the buy now, pay later product of Klarna, and they've collaborated it within their product set for customers. So they are saying, okay, we can't modernize the legacy backend so fast, but let me collaborate with this fintech to help give a product to the customer quicker and faster than building one from scratch. So these are the recent trends. And if you look at this, is a good graph by Everest Group, which explains exactly what I just told you. This is your conventional financial services firms, the HSBCs, Barclays, even in India, it could be ICICI, HDFCs, the conventional financial services firms. This is a big tech which are trying to enter the financial services space, be it a Twitter, be it an Apple, be it a Facebook, be it a Google. They all want to sell financial services products. They want to give personalized experiences. You are able to buy a loan even from them. I'll come to that. What embedded finance means is going to take step one further. And the last one is fintechs, which you're already aware of. There are different fintechs for different product sets, different aggregation tools, etc. In the big tech, when I'm here, let me tell you, this is the difference. If you look at it, the conventional one have very high product portfolio. So you heard Sanil talk about the product portfolio breadth. You have a bigger breadth than anybody else, conventional firms. But generally, big tech have better user experience, and fintechs have better value for money because they are nimble, agile, and faster. They have less legacy. They have all the data in one sources, and the extent of personalization is very high. So if you look at a fintech, for example, Airbnb, or you look at a fintech like Uber, you'll see that their personalization levels are very, very high. Even a fintech bank like Starling, which is the one of the few startup banks in UK which met with success, Starling, Tide, Tandem, Alicia, these banks all have high level of personalization because they are fintech enabled from day one with less legacy. Now I come back to why embedded finance is important. Now, just before I start the slide, I just want to explain embedded finance in uh, little more depth. Embedded finance can be a financial tool or product given through any means possible from a non-FS entity. Example, you could be watching a Netflix show and there could be a advertisement on the side, or you would like the house that you saw and you would like to apply for a loan or even talk to the real estate agent about it. The finance is embedded within the Netflix application to allow you to go to that directly. It could be managed by a bank at the back end, like Yes Bank, and could be a fintech. So the finance is embedded at point. Sorry. Okay. Yeah. So this is embedded finance and the adoption. So for embedded finance is a good example. And I think Sanil told about how embedded finance is going to change the market dynamics from the next time on with regards to, but you can look at the adoption curve. When it started, it was all about venture capitals, founders trying to enter embedded finance. Then it became wealth management. You can see here, there's wealth here. Then it became B2B insurance. There is people giving insurance to landlords and to corporate entities. Then became trading in crypto and FX. You saw Wise was one of the few ones which used embedded finance. You can use Wise in any embedded finance application at a retail point, at a travel point, at an airport point. And it can even be getting a bus card. You know, the other day I bought a train card to move to Manchester by train, and Wise was selling me all the things that's possible, including food on the train. So they were able to embed all the applications of third-party retailers and FMB into the application. The next one was on the projects and the predictable repeat process on general insurance and B2CP. So the embedded finance is going to change the way even India operates. And that's why I think Sanil covered it in terms of expanding across the borders. Then because first, there'll be no borders. It's all global. Number two, people could transact at any point. It could be on your Netflix show. It could be while buying a train ticket. It could be while buying a retail shop. You could have your point of loan, your point of lending, your point of payment, your point of buying third-party applications at that point, rather than go back home and open a laptop and do that. So that's where embedded finance maturity is moving very hard. And we see that already. By the way, in the developed world in UK and US, there are most of the point of embedded finances are in the application. Like I just told you the example, the train tickets I booked yesterday. I could do everything at an embedded finance level, even in my including buying the movie and the show from that perspective. So there's coming to the last slide that I have is the predictions. And these predictions are basically, like I said, based on what we have seen in the fintech market here, the fintech and the banking financial services market, the way they have collaborated. So these are the 5 trends and collaborative predictions that we see. We will see like I said, lines blur between banking and fintech, and they will operate, but there are some trends that will change the way they operate thanks to the pandemic and the economic downturn and predictions. There will be more streamlining, and number one is very important. Fintechs for a change will become like banks in terms of measuring on profitability rather than measure on top line growth. I think a lot of them, if you've seen the press, a lot of people have great top line figures and they all want to be, they hurry to become unicorns. I think that bit will stay. They become like banks, they look at measured profitability. They'll adopt, and to help get profitable, they'll have to adopt AI and machine learning. So there's an acceleration. You can already see the acceleration on AI and ML across the spectrum in banks and fintechs. So that's the alternate, and they'll also monetize. When I say alternate monetization models, I've had 3 fintech examples, 2 of which I was part of the advisory team, where they sold their IP to a bank. So they had an IP, they monetized their IP by selling their IP to the bank on a lease model. So they are looking at alternate model. Previously, they said, I will not cooperate with the bank, I will sell directly. Now they're saying we are ready to cooperate, we're even ready to give our IP to lease. So that's the second. The first one. Second one is they will move away from mere bundling. Right now, you'll see there is a bundling and aggregation tool for everything, You want to buy insurance, you want to buy home insurance, you want to buy a lending product, mortgage product, buy a card, there is an aggregator tool, there is a comparison tool, there is an everything. They will actually go into financial system orchestration. So you see a lot of the things in US and UK, most of these aggregation tools have started issuing their own insurance company. Very much like Apple getting into from music into payments and other things. A lot of these people who are aggregating, example, I'll give you a good aggregation. In the US, there's an aggregation tool for retirable pension called Retirable. The Retirable used to be an aggregator, which will give you the best retirement pension across the US. Suppose you decide to put your money in a retirement pension. Now, Retirable has started giving its own pension plan. They said, why should I wait for the big guys to give me a plan at a particular rate? I will start selling the pensions myself, my own pension plans. So like that, people are getting into their own plans. You look at Crew or Shaw in UK, they've started issuing their own cards. Previously there used to be a comparison which card is better for debit, credit, faster payments, backs. Now they're issuing their own faster payment cards. So there are similar things coming up in terms of they getting into the orchestration bit. The third one is eliminating operational inefficiencies. A lot of data silos, and you know that most banks have a lot of legacy and data silos. That's the reason they are not able to get AI moving. They're not able to get faster customer service. A lot of them, including thanks to embedded finance, which I just explained, they will collaborate with people and leverage their speed to overcome their inefficiency. So one is to cut costs by getting AI. Number two is to get faster to market by collaborating with fintechs who have already done it so that you are reaching the customer faster and not waiting. The fourth one is intimacy. I think previously we heard this thing about being customers of for number one, etc., etc. I think Suresh, you need to go on mute, Suresh or Chetan. Hello, Chetan, you need to go on mute. Thank you. So the number 4 is customer intimacy. So in every aspect, customer intimacy will take over. What I mean by intimacy, let me tell you. I know all the banks in fintech say the customers are first. Intimacy is if a customer needs a proper plan. Example, I saw that happen. The other day, somebody went into the bank branch and asked for, can I have a lending solution which not only lends for my home and the refurbishment, but I also want something to include my child's education and my travel plans in terms of vacation plans. The bank doesn't have a product for the last two, but they were able to, not without saying no, they were able to integrate Klarna for buy now, pay later for the travel plan and student loan corporation for the student loan into the same package. So they're able to be intimate with their customers and offer a end-to-end solution by being intimate, irrespective of whether the fintech is a competition or not. And that's what I meant by saying intimacy. And the fifth one is this country silos. I know there are lots of internal regulatory issues at sometimes. India has its own regulator, UK has its own regulator, US has its own regulator, but there will be still cross-border transactions. I think Kanchan mentioned a word in the beginning, talked about how UAE and US had the largest number of remittances and monetary transactions cross-border. That will increase as the days go by because not just payments. You look at the 4 areas I mentioned, there's lots of wealth management. Do you know that it's more than 30% of the wealth management companies in the UK have customers from India. So 30% of the wealth management customers are from India in the UK. Of course, there are others like Russians and others, Americans, etc. But I'm saying you'll be surprised. There's a lot of cross-border wealth management transactions happening. Same with Treasury. A lot of the big SIs, I also work for a lot of them, where the Treasury is held in different countries and a lot of cross-border Treasury transactions are happening. Same with ESG. I know the carbon credits are a big thing these days, carbon credit and offsets. And there are a lot of the companies, even in India, who are doing cross-border ESG carbon credit transactions or regulatory approvals for carbon footprint, etc., or even their own ESG compliance for their customers through global channels rather than just back in country. So that's what I meant is that these are the areas that will grow cross-border across the spectrum. And this is a good time for me to hand over to Anirban so that he can explain how the cross-border opportunities from a Yes Bank perspective are going to help. And if there's any questions, please feel free to ask.
Yeah, thank you, Sunil. First of all, good evening to all. My name is Anirban. So I take care of the cross-border payments and the capital account transaction perspective in terms of the FEMA. So I'll just give you a brief about the journey about the fintech collaboration with bank for the cross-border receipt and payments. That's called, if you know about neo banking concept. There are a lot of fintech which are coming in the space where they want to collaborate with the bank for the cross-border transactions. Cross-border transactions is all been regulated by FEMA, RBI. There are a lot of government bodies which has to be regulated and has to be other the timelines also. And these are a little bit critical in terms of when it comes in terms of the cross-border. So neo banking, I'll just give you a brief how fintech get advantage when they collaborate with banks. These are a lot of exporters, importers are in the market. When the fintechs want to facilitate them in terms of giving solutions for the cross border, so they can integrate with all about the banks to facilitate in terms of transactions. Like if suppose an example, one customer want to do an import payment. So the customer can go to a fintech journey and the fintech can collaborate with us in terms of bank where they can do an integration with us, do a collaboration with us in terms of a digitalization as a API, and they can facilitate their import transactions with bank. The journey will be starting from account opening to the regularization of the documents that bank can take all the space to it. And it is all about the collaboration which we do with the fintechs. It is a like API integration which we have to do with the fintech that take place for facilitating all types of cross-border transactions with fintech, with exporter, importer. So these are all like very critical aspects in terms of regulatory. As a bank, we facilitate to fintech by taking care of all the in all types of KYC, due diligence, and like in terms of like imports. When we do imports, there's certain custom bill of entry which has to be submitted. That bank has to facilitate with the fintechs by a digital integration, by a API integration, so that the customer can get facilitated with all this type of transactions. So this is a benefit when fintech get collaborates with bank in terms of export import. That's called a neo banking, and it is a BaaS, like bank adding as a so these are a major part of neo banking when they collaborate with bank for this cross-border transactions. It can be when the cross-border transactions been completed, there are certain regulations which has to be followed. That can be also digitally integrate with the fintech as a bank, where when they do export, there are a lot of exporters which onboarded in the fintech and their journey in terms of fintech. They have a digitalization, but they cannot do the transactions. For that only they have to collaborate with bank. In terms of exports, there are a lot of regulatories where the shipping bill has to submit. So they can go to the fintech and we can have an integration with the fintech, with the bank, so that they can submit and they can have that journey for the submission in terms of RBI reporting. These are all majorly cross-border. When comes into a picture, there are a lot of things which has to be reported in the proper timeline and in a proper time frame. So that has to be followed. That bank get facilitated when fintech get collaboration. So this is one way in terms of neo banking. Secondly, there are a lot of structuring which we do for the importer and exporter, like in terms of funding. There are a lot of exporter importer where they are into looking for a working capital where we can do funding in terms of FCY currency, which reduce the cost of that importer and exporter. That fintech can facilitate with the banks. Suppose an example, when there's an exporter importer, they can take a working capital loan to facilitate to run the show as a working capital in terms of like LC, bank guarantee, any types of non-fund based or fund based. So we can facilitate them in terms of foreign currency as they are into cross border, and the FCY as a FCY, there's an inflow and outflow. We can facilitate them in a foreign currency loan where the rate of interest can get a benefit to the customer. That fintech can collaborate. It comes up when the fintechs get collaboration with the bank to facilitate this type of services. This is second perspective. Third is like there's a OPGSP model which is going on as of now. There are a lot of fintechs which are in the space of OPGSP. It is majorly used for this online platform like Amazon, eBay. It's OPGSP. It's an online payment gateway service provider where fintech become a neo banking in that to facilitate all the exporters in this mode. Where there are a lot of exporters, OPGSP has a model. I'll just give you a brief about OPGSP. It can neo banking. It is a type of a customer who can onboard it, exporter, importer. But OPGSP there's a limitation to it. It can be the limit is like a $10,000 per invoice. There are a lot of customers, those who do online services in terms of like Amazon. A lot of exporters do. The fintechs can onboard it on the OPGSP model. So this has been regulated by obviously RBI. The bank can facilitate the things where we can onboard the fintechs in OPGSP model to facilitate all types of cross-border transactions. But there's a limitation for exporter. There's a $10,000. For importer, it's a $2,000 as a per invoice. So this is related to OPGSP model where we can facilitate all this type of customers, where they can, for an importer, we have to be as a PA payment aggregator that has to be approved by RBI. But for exporter, you don't have to require a PA licensing to it. You can collect the funds across from the overseas where you can have a full account there, and you can get the funds from overseas under Nostro and facilitate through API through all the exporter which you onboarded and get it circulated. So this is the OPGSP model, but it is a limitation to it in terms of the volume perspective. But neo banking, there is no limitation where you can facilitate with the banks and do your transaction. This is all about the digital journey which you facilitate through bank in terms of API integration, in terms of export, import, and in terms of funding also, in terms of FCY funding. Third is a capital account perspective. There are a lot of fintechs raise funds from overseas in terms of equity infusion, but there are a lot of FDIs which comes up foreign direct investment. So we do facilitate for this FEMA perspective in terms of getting the funds, how the funds come through from the investors, and how it has to be facilitated in terms of getting the 6-pointer KYC and reporting to RBI and to the timelines that we do as a bank as a whole, as a Yes Bank also, we do facilitate that things that also we can do in terms of this capital account transaction. There are a lot of Indian entity also invest in overseas as a overseas direct investment. There are a lot of required the FEMA guidelines perspective. There are a lot of reporting required that also bank facilitated when fintech get collaboration. So these are the major like when fintech get collaborated with bank, there are a lot of things which get suffice easy access to it. But the thing is that it is all about the digital integration. Rest all the timelines, reporting part, RBI perspective, FEMA, that bank take a call at the end. We have been a bank has been an authorized leader. There has been licensing to it, so that gets sufficed in this. So these are the major critical role where fintech get collaborated with bank. And we have also a GIFT City concept. Obviously, we have been interesting in terms of this IFSC unit, which we have as a Yes Bank also. So my colleague Himang, he's there in the line. So he will be taking further in terms of what are the opportunities in terms of fintech when we have an offshore account in GIFT City.
Good evening all. My name is Himang Parikh. I am based out at Abu Dhabi rep office for Yes Bank. And I take care for Trade Forex and the GIFT City as a branch for all our GCC clients. So basically, if you see, GIFT City is an offshore banking which has been started in Gandhinagar. And mostly all the clients which are based out of India, whether it is individual or non-individual, can have the banking with a GIFT City. Basically, if you see for the fintechs, they have a multiple registration into multiple countries rather than having their banking into an offshore banking either into Singapore, UAE, or anywhere else. They can have that in their home country where they can do all their business transactions whether it is current account or its capital account transactions can be taken care from our GIFT City branch. We currently operate into 5 currencies. There is dollar, pound, euro, AED and SGD. We can do all the business transactions, that is import transaction, export transaction, merchant trade. It can be infusion of capital. That particular branch as well as bank can be used as an holding account as well. If you see, there are a lot of PEs and VCs who are holding their investments into SVB. Post the fiasco happening into Silicon Valley Bank, there are a lot of VCs who have started their banking with our GIFT City into different banks and have remitted the funds, parked the funds into FDs or as into current account. So GIFT City, if you see IFSC unit, is a proper banking, but it is for your foreign companies or its foreign transactions. So we also take care about the trade transactions, about their letter of credit, bank guarantee, or else if any of the funding has to be given to the company into a foreign land, that can also be taken care from our GIFT City branch. As a whole, if you say it's an offshore banking, wherein a client who wants to have a banking in offshore banking can open an account with our GIFT City and do all the transaction with us. The foreign nationals can have their savings account wherein they can get attractive interest rates into dollar, pound, GBP, AED, or else they can create deposits and have a current account with us. Any question on GIFT City? I can just take it up. Basically, it's like a normal banking only, but it is very much useful if you see on the for the fintechs part, whether if they have an investor into a foreign land, they can have the banking with us in the GIFT City, or else if they start their any branch office in the jurisdiction out of India, for that also they can use this facility and have a good control, have good rate of interest and good services from our bank. Sir, any question on GIFT City?
This is only for the foreign one.
Yeah, it's only for the foreign entities. The
Foreign
Indian
entity and
entities
non-resident.
registered into India cannot have an
Non-resident.
account with GIFT City.
So let's suppose if the foreign nationals people are putting money in the GIFT City account for a startup, like let's suppose if there is a startup and they're
Correct. You can incorporate your company in GIFT City, IFS.
that incorporation is required basically.
Correct. If an
Not
individual
necessary.
as a
I would
non-resident,
differ. Not necessary. A investor who is based out either in Singapore, Hong Kong, UAE, or else a jurisdiction which is allowed to have an offshore banking can have only an account with the GIFT City. There is not
GIFT
necessary. They need to incorporate the company in GIFT City.
if it is a foreign entity, you can open the account there. If it is not a foreign entity, if you have an account incorporated in IFSC, then you can open the account. Indian entity, resident individual is not allowed in GIFT City. It is just that a foreign entity can open the account. Or the offshore account, simple as that.
So they can have a subsidiary basically.
Correct.
Yeah.
That's the
Yeah.
opportunity which you are looking for. Yeah.
And if you
Sir,
need
if
more
you see-
details,
Yeah.
there is actually, we've done 2 sessions with the CTO of IFSC. You should be able to locate it within the YouTube repository that we have for these events.
If you see the interest rates also, they're very attractive compared to the foreign land. So any of the fintechs who have a parent company into a foreign land, just for a better rate of interest also, they use it as a holding account and they park their funds. Short-term, long-term, whatever it is.
So it's like you're raising funds, you have an entity externally, you can keep those funds in, Gandhinagar in US dollars. You don't have to convert necessarily. You can earn interest on that whenever you want to convert on a monthly basis or whatever. Small amounts you can keep converting. So that's a hedge that you do against dollar.
I think this has been really interesting. Is there anything else you want to share?
Hemang?
Ma'am, this was the thing I want to discuss about the GIFT City part. If you see, so basically, GIFT City as a whole is for the raising of the funds as well as for the lending part. So both the side of the banking, that is liability and asset, can be done through our GIFT City branch.
Excellent. So those who are not familiar on about the GIFT City side of things, IFSCA, let us know. We can definitely share the links. And if you want to do another session with them, we're more than happy to do so. I think between Ty and Kaden, we've had at least 2 events. I think our belief is we need to have more of these because that'll help people to set up their organizations in their incubation center and explore what are the new ways of doing the cross-border business. I think one of the things which I was very interested in, and you guys can probably share, because as soon as you look at cross-border, then there's quite a bit of discussion that comes in on the GDPR. That's your privacy laws across the multiple jurisdiction.
Yeah.
And to some extent, I guess if you are a large bank working in multiple countries, then you do cover that. Whereas I think a startup will find it more difficult to get compliant in those areas. So
Right.
that is one element that it'd be great if you could share some perspectives on how you are, covering that aspect. The second bit, I think I'll kind of touch on what Sunil was talking about, the new trends, as it were. He touched on AI as one of the, that'll impact the way you do things, but it's not just AI. I think if you look at the quantum computing side of it and the impact to how future of a whole range of things will fall into place. I think some of the new regulatory changes will come in by 2038. 15 years seems like a long time, but in reality, when if you're a large bank, to make those changes, it's not very long, especially when there are serious shifts to those kind of changes. So I think it'll be interesting to see what is happening from you guys, especially since you're representing the banks, on how are you kind of engaging with the deep tech side of it. And I know we have a number of people who are coming in from the technology side. The third bit is, since you were talking about import-export, what is your engagement around ONDC? I'm just nesting a whole bunch of questions. If others are there, they can kind of add to it. Anything that you're doing with ONDC would be very interesting to know, because you have the payments, the buyers and the sellers, and they're still struggling to get all the ecosystem players in place. We know a year or two from now it may be a non-issue, but since we are starting that off, I think that is very much there. There are a few questions in the chat box, so we will kind of take that. But maybe you can start with some of these perspectives and then we'll kick it around and take it forward. Whoever
I'll
wants
pick up
to.
the ONDC bit and then hand it over to Anirban for the FX side of things. So as a bank or as a government policy, so ONDC is not a platform, it is a network, right? It is like an internet. So we are creating, as a country, we are creating sellers across the product verticals or locations, etc., to create hyper-local experience for the customer sitting in certain location to identify products at a better price discovery. So we are, as a bank, our role is to ensure that these players who are with a network, it could be electronic, distributor like a Girias, who's popular in Bangalore, bring them onto these kind of platforms so that we are, day by day, we are enriching this entire network with more and more players. Because as a consumer, if I'm sitting on a laptop and searching for a particular product, I should be able to search who's the local player in that particular product and which is the lowest price which I'm getting. So that's an exercise, or that's a process which will be ongoing for a while. While new players are coming on board, we are trying to create a network through platforms which are created only for listing these people, like a Paytm or all these players are there to enlist the sellers. There is a seller app which is based out of Bangalore itself. So we do work with these partners to get these retailers onto this particular platform so that customers are able to search for the product and do it. This is it's a very new initiative, like a CBDC, for example. These are two new things which banks are playing around with. And it is our duty as a country or a citizen or a banker to ensure that this grows, because we are competing with the largest players, which are Amazons and Flipkarts of the world, wherein deep discounts and deep pockets make the retailers away from the market. So we are trying to protect that interest of the retailers, serving the country in the sense that people are able to discover the smallest shops next to you to buy the product from. So they are also protected in that sense. CBDC, I mean, I just thought I'd just share that also. So that is also another, new initiative from the regulator, which is taken heat now. And we are also we're one of the few banks who are participating in the pilot projects. We are quite close to the time when if I have a phone pay or a Google Pay app, and if I have a CBDC app on the same mobile, I can use either of the apps to scan a QR, which is available. It could be from any provider. So it's a, interchangeability that we are looking at. You can debit your wallet of CBDC or your account and pay the money to the other person. So this is also a very good initiative, which has started off a few months back, I think 3-4 months back. It was on a pilot phase. It was very restricted in terms of availability of the QR and stuff like that. So now with the interoperability between UPI and the CBDC, it will be, I'm sure it will take a lot of, business now from now. So, yeah.
Coming to the compliance part of the export import, when we majorly what as a bank we do in terms of compliance to it, like we majorly see what the sectors they are into. There are a lot of sectors sectors like logistics. Yeah, in terms of services, they are a little bit like we have to see the flow, inflow and outflow to it. There are certain compliant to be checked out, because this is a very critical thing when we comes into the cross-border transactions. The cross-border transactions in terms of like when you see logistics, IT, services perspective, not in terms of physical goods. Physical goods, we can have certain couple of checks which we do in terms of like promoter experience, line of business, and where they're into, like into export of which countries they are dealing with. So these are a lot of the basic checks which banks do before onboarding in terms of like importer and exporter. And we follow also, there's a customer profiler which carries all the details of the customer at the time of onboarding. So that majorly cover all the compliant policy when we onboard them in terms of doing a cross-border transaction.
Yeah, thanks for that. So maybe this is a question from Manoj Patel. Would you like to take that in person, Manoj?
So yeah, it's okay because this is not. Am I audible?
Yes, we can hear you.
Okay, so would like to know for the SPV and FDI model from the if it's a subsidiary from the international markets, right? So how is it allowed and what's the process, right? And moreover, is there any restriction on the maximum amount, or even we can execute on the smaller amount as well? So we'd like to know more.
There is no specific amount in terms of getting the FDI. It is all about the sectorial cap as per followed by the FEMA. So you have to see what is the sector to it, which is under the automatic route or government route, which has to be followed by the FEMA regulations. So there is no specific, if you are the investor is investing in a company as an FDI, as an equity infusion, so there is no specific amount to it. You have to see what are the sector to it and what are the, if it is a prohibited as a real estate, it is not allowed. And there are certain sectors which has to be followed by the NDI rules 2018. That has to be followed by the FEMA. That has to be other.
Question. Yeah. So you guys mentioned that fintechs are working with banks, and so one of the aspects that I have seen is most of the times documents can be collected by fintechs, right? But
yeah,
banks still have to collect documents physically,
yeah,
and there's a concept of OSV, right? So what exactly, is there any development going on in this sector, right? Okay, are banks doing something?
Yeah.
So if you can share some light on that.
If you see current account, go. If you see the prospective current account, as for the RBI, we have to do a due diligence to it. It is a digital platform where we can onboard the customer, but the due check has to be done by the bank only. When you onboard an account, we have a digital journey for opening an account, but for the KYC verification, if it is a private limited, all the documents have been in place, like MOA, AOA, certificate of incorporation, we can get from the online itself, and we can validate that. But in terms of the directors, KYC perspective, that the bank has to validate. It is the RBI policy and the rules which have to be followed.
And that is completely paper-based, basically.
That is not complete, it is not as a paper based, it has to be physically, visit has to be done. Documents can be as a digitally, can be taken out for onboarding.
So it's like I'll break it up into three parts. One is an individual as a customer getting onboarded by a bank. So most of the rules, regulations are restrictive in terms of onboarding a customer. Once you onboard a customer, you can sell products to them without physical documents. That is still relaxed. While onboarding a customer, if the banks these days have APIs to onboard individual customers without any personal visits. So because there's a video KYC, you are in front of a camera and you're blinking on it, and all those things are fulfilled, and your documents are authorized through Aadhaar, OTP, and stuff like that. So that is done, and an individual gets an account number immediately within minutes as we speak. If it's a non-individual, that complicates the journey a little bit, because there are like proprietorships, partnerships, LLPs, private limited and public limited and stuff like that. So documents are different for each set of constitutions. So for a proprietor, it is much easier because it's an individual's KYC itself, because he's running the business and it's the owner's KYC there. If it's a multiple person owned entity, it has its own complication. So banks are right now grappling with getting those entities onboarded onto a digital journey. Proprietors can be onboarded even now through an API, like an individual getting onboarded. So for non-individual and non-proprietor companies, there is a physical digital journey now. So you do a certain amount of activity till in a digital form, then you get the relationship manager to visit and get a signature, etc. That is still to be.
So I have a follow-up question on this, right? So I think current account makes sense, right? But let's suppose in terms of loan, right? Many times there is a guarantor needed, right? Okay. So then two parties are involved. One is like the person who is taking the loan, and the other one is guarantor, right? In that case, basically, still like that complication is there, or the entire journey can be digital or something.
Yeah. So there is a loan, there is escrowing. Escrow has two parties in between, the bank plays a role. These are still more complicated activities wherein documentation, wet signatures are required as of now. So there are personal loans, there are one-to-one kind of loans, like an entity giving a loan to an individual. Those are still easy to automate. But if there is a guarantor involved and all, there is a pledge to be created on certain assets, etc. That it's still a physical journey.
It's still a physical journey. Are there any sorry?
No, go ahead.
So are there any regulations are coming, maybe like through blockchain, it can be relaxed or something?
So there is a entity under the regulator who's working on use cases of blockchain, wherein around, I think 17, 18 banks are participating. We are one of them, to identify use cases which can be automated through blockchain. So land registry is one of them, which governments are doing. Within banking also, there are trade transactions, cross-border transactions, which we are trying to do. So it's taking time, to be honest. It's a very fancy thing to say that blockchain is there. We can use blockchain for so many things, but to make the infra available for the network, like it is not just one individual or bank doing the transaction. The counterparty also has to be on the same network, or the blockchain, etc. So there are dependencies involved in the network itself. So it will take time, but there is a journey on, but it's no time frame as such. Right?
You had a question.
Yes. So just follow up on this. While there are physical journeys, as we know, turnaround time, those are the primary motivators to digitalize a journey. So can you boil it down that compliance would be a checkbox that is a must, and it is a necessary but not a sufficient condition to move towards digitalizing a process. So is that the one thing that stops us and acts as a blocker to move in that direction? If you're talking about digitalizing a bank process, might be two different routes.
I would say yes and no. Yes, in the sense that there are, like I said, the constitution of entities where the documents probably are not available physically, digitally. If you're an individual, your Aadhaar is available, your PAN is available, everything is available digitally. You can get it authenticated. If you're an entity, there is a certificate of incorporation, memorandum of association. So many things are, not everything is available digitally. I'm not saying that these are not. So the process itself is not so easy to complete digitally. That's the reason. Otherwise, compliance angle wise, there is a growth or the progress happening on these entities also, a good amount of process is automated. Like I said, once you onboard a customer, you can give whatever products you want to give them as a bank without having any paper being signed as such. So we have those journeys available, but onboarding is still a concern.
Thank you.
If I may just add, I think in some ways the regulators are kind of setting standards on how quickly you digitalize the ecosystem itself. You have a number of let's say the corporate banks or NBFCs who have been around for the last 20, 30 years, but their speed of digitalization and their understanding of it is, work in progress. Whereas I think the fintechs and especially tech fins, as the IFSCA CTO was saying, that's moving very fast. And therefore the partnership between the two is probably speeding up the ecosystem. And the government is very keen that they have to go fast. I think having been a banker, but also a very passionate advocate for the fintech, technology can unlock a whole range of things. But at a national level, you have to balance it out with the risks that you may have risks for a retail investor or a depositor or whoever it is. But there's also the risk of, let's say, where does the money come from? Where is it going? As a country, we need to keep that. Technology can unlock the speed at which you move it. Banks are custodians and they have a fiduciary responsibility to make sure that they take care of the requirements at a country level. So therefore, it's not that having spent a lot of time with the regulators, yes, they can be highly frustrating sometimes, but what tends to happen is they are trying to balance out these things. You engage with them, actually just go to the third, fourth floor. RBI's Innovation Hub is there. They're very, very open for conversation. So don't underestimate the influence that the fintechs can have with the regulators to change. But equally, I think the fintech community needs to understand where they're coming from. And do we have a better way of doing things? With this, I'd like to get Sunil's perspective on some of the conversations we've been having. Sunil, anything from a more Western perspective, and because some of the folks are also looking at cross-border activity. So any of your perspectives?
There are three perspectives I'll give. 3 happens to be my lucky number, so I just said 3. So one is the cross-border one that Anirban explained is, I wouldn't say the West is advanced. Like I said, the digital bit at the beginning of my presentation, but there are lots of cross-border opportunities happening today. It is despite the regulatory pressure, and cross-border regulation has not kept up with the same rules, because you still need to look whether you're not violating some regulatory law in India or UK or US or Germany. But there's lots of cross-border transactions happening between fintechs, which is accelerating the banks. Like I told you about the wealth management example, I gave you the venture capital funding example, I gave you the example of ESG, carbon footprint and carbon compliance. What the regulator will do, like you rightly said, they have to play a check and balance game. They can't say yes to everything, of course. And they also want to see that there are no more things like you've seen the press about many fintechs and banks collapsing on the high top line, unicorn, good drive for growth without drive for profitability. So first, we are seeing, like I said, a lot of cross-border opportunities happening between UK, Europe, and India in terms of payments, ESG, wealth management, treasury. And that's only going to go better thanks to India's booming economy and the amount of startups and fintech ecosystem that's happening. Number 2, I believe the banks will play a major role. Whatever people may say, the naysayers may say that Apple and Facebook and even UK entities, etc., these guys will take over the banking system and the payment system. The traditional banking services have the reach to urban and rural masses in India and across the border, and they have the trust. That's more important. When people see new fintechs with the less trust, they feel like, I think Sanil was mentioning going to a place in Northeast and somebody's going to do digital. They'll say, well, we'll do phygital, but they will trust Yes Bank to do it rather than one fintech opened by Sunil and Co, which will go to one place and say, you can trust me with your funds for a particular transaction. 3, As the economy moves towards funding in terms of getting people more actively involved in different financing schemes, you will see people, the customers, wanting more from the banks, which will automatically put the banks on a path to collaborate with the fintechs. Example I just again gave you in my presentation was how a particular high street bank, a big bank, a top 5 bank in the UK, is offering fintech services across the board on their mobile app, to the iPad app, to the branch. You're able to get things which are not in their product portfolio. Example, buying a vacation loan. That's not what a bank does generally, giving a loan for a vacation. But there's something called as buy now, pay later, BNPL, in part of Klarna, where you can buy and pay for your vacation bill or across 12 installments of 14. The bank was not offering the product, but they were able to offer the product across the account. And that's what will happen. The same cross-border stuff will happen in terms of giving transactions across the border. And I see that again already with students who are studying in UK universities, German universities, using loans and lending mechanisms across cross-border to facilitate a better interest rate or better payment scheme or better getting on the market ladder, job ladder faster. So these are 3 things I see on cross-border.
Thanks so much, Sunil. I know we are kind of well over time. It's been interesting. Those of you who are here in person at the KDM office, please stay on. There's a bit of networking. You can have a few more conversations with. Yes.
In case of startup ecosystem, what are the facilities you are going to provide?
Okay. You got me started now. So we actually have been working with the startup ecosystem for the last 8+ years. And we pride ourselves to be one of the startup banks of the country. We did not have any corporate backing when we started as a bank. And we know the nuances and pivoting and all those, stuff startups go through. So we have a whole lot of offerings in terms of regular banking stuff, which most of the banks would be offering. We wouldn't say that we are notch above them, notch below them, nothing like that. We might be very comparable with products. What we offer, which is kind of unique, is funding, debt funding, that for that matter. There is something called CGSS with the government guarantee and stuff like that. That we are the first bank to launch it, and a couple of other banks have launched it, but we are trying to actively promote that within the ecosystem, which can go up to 10 crores of funding with a guarantee from the government. Secondly, there are non-collateral based, debt again given to startups who are in operation for the last 3 years. The CGSS is for 1 year vintage. The other program is for 3 years plus vintage. You should be a revenue stage startup, and you will be having, even if you're in a burn stage, it doesn't matter. We will still look at your revenue, GST and stuff like that, and make sure that, okay, we'll have some safeguards around how to get the money back, because that's the ultimate objective of a bank, right? Like Sunil was also mentioning, the trust factor, that somebody's depositing money, that is what we are lending to the customers. So it has to come back to us. So some safeguards will be there, but at the same time, we can go up to 5 to 10 crores of funding to the startups based on the requirements and analysis that we do. So that is one unique thing. Second thing, what we also understood from these startups is that there are so many concerns about, if I'm a founder, I don't get a credit card. My rating might not be so great in terms of CIBIL score or whatever. We have tried to address that with certain variant of credit cards, specifically for founders and the startup ecosystem. As we speak, we are in discussion with KDM to do something around that. We will probably come to the press soon on that. So these are the 2 things. Apart from that, I would say people matter a lot, because if we meet a founder, we get a feedback saying that, okay, I walked into a certain bank, they did not even consider us to talk to as such. So we don't shy away from talking to anybody as a founder. Even if you are a bootstrap founder, you don't have an excellent idea, you don't have an excellent startup running right now, for that matter. Let's not talk about the idea part. So we are open to engage with any stage of startups, even bootstrap onwards. And we have calibrated our products also so that people are not, we are not charging people so much. We are helping them to build their products. Even if it is a fintech, creating some fintech solution, we have our own API stack and stuff like that. So our product team or the tech team is also quite friendly to startups in terms of customizing solutions. So that is a key factor if I can talk to you, because we get feedbacks like that, that you guys are good to talk to, but some of the other banks, we did not get this kind of a treatment, etc.
And one more question.
Yeah.
In case of startups, there is a business ventures and also at the same time, nowadays, you can see NGOs, public charitable trust.
Right.
Those are also increasing and those are providing much more facilities to the people,
Right.
need to the people. Some of the banks are providing savings account for the NGOs based on certain
Criteria.
criteria. Do you have such kind
Yeah,
of?
yeah, it applies. The rules are applying for all the banks the same. So there are trusts, all those trusts are allowed to open a savings account with the bank. Schools, most of the schools that you see around, they will be holding a savings account rather than a current account. So there are certain criteria or category of customers who are allowed to, even if you're not an individual customer, you are allowed to have a savings account. We also have APIs for savings accounts opening. So we do neo banking with fintechs, open accounts. We do APIs for cross-border transactions for that matter. If you want to invest in US stocks, for example, we have APIs which can make sure that your money gets transferred within a few hours. It doesn't take a day also, so that you can start investing in, say, Apple.
So if we have exports, we are doing software export, we have to make payments also.
Right.
So we have to get it full in rupee and then make again do a forex transaction. Also, can we hold it in that local
Gift City? Yeah, you can do that. So
Gift
City is one of them. Yeah.
Gift City is only for I'm Indian, so I have.
You can open EFC
account.
EFC. Exchange earning foreign currency account.
Okay.
Where you can hold
purely foreign exchange.
It's a USD denominator or
Or pound.
Yeah.
We have
And
multiple
can make
currencies.
payments directly.
Without converting.
I don't have to convert.
Without converting.
Yeah, there's no point of conversion. You can hold the
That is
currency.
available for companies and
Companies, it is for companies only.
companies. And that is only private limited or
No, across
LLP.
proprietorship, partnership, LLP, limited, private, as for your constitution. It is for the current account.
foreign export related thing. I
Yeah.
can just bring it over there. And if I
Correct.
need, I can.
You can park the funds. There's a certain regulations which has to be other. It's a succeeding 21 days, we can hold the FCY in that account.
So there's a time limit.
Time limit.
To which you can hold it
That
in the foreign currency.
in that foreign.
Correct.
And then
If you're not utilizing, you'll have to convert it. Otherwise, you can remit it in the same currency.
Okay.
And what is the, suppose, I want to convert it to what charges are there?
Okay, charges, I think we'll discuss it offline.
Maybe after the main session is over, we'll be here itself. I think there's one more question. We'll wrap it up. And those who are in the room, my suggestion is we close down the the call, so that those who are on, unless you guys want to listen to the answers, then we can leave it on. But otherwise, I think we can get, yeah. If that is okay with everyone.
I think we are going out now. There's some snacks and coffee.
Yeah, snacks as well. So, okay, I'd like to say a big thanks to the Yes Bank team. We started this conversation a couple of months back saying that we want to do something together. And the idea is fintechs do work very actively with the banks. And this is only the first of the series of getting as many people engaged around this conversation. As we can see, there are at least a few potential conversations that will go forward. So special thanks to Sunil, Anirban, Hemang, and Divya, who is actually been anchoring this whole and coordinating this whole exercise. So thank you so much. And Sunil, thank you for joining us from the UK. It's really good because especially when you're talking cross-border, it's always good to have voices from different parts of the world. So thank you so much for joining us.
Thank you.
As always, they are fabulous. They open their doors and hearts to this engagement, and it's truly an open culture which we have. So it's fantastic. I'll just share a few ideas on what will be coming through in the near future. Because based on the feedback, so I know one of them will be around agri-tech, because Timina has been saying, hey, you haven't done any sessions on agri-tech for some time. So that sparks a lot of the conversation between fintech, what the banks are doing, and the possibilities. So to your point, actually that's opening possibilities that the regulators are supporting. So it's actually fascinating to see how that's moving forward. There will be the usual regulatory update. We will have a few more founders coming and sharing what they're up to. We will also, I think, June Ventures and Ty have been talking about doing a workshop on cross-border fintechs and the issues that they tend to have. So we're going to kind of find a time and a small group of people willing to spend half a day to break down what are the issues, and then can we take it to the regulator, to the banks, to whoever, just kind of solve that problem. I think there's one more for those of you interested. Ty is signed up with SPJN. They are running the fintech program. And the advantages, I think, Yes Bank is also part of that exercise out of Mumbai. I think that also gives you membership rights within the space. So it's, we are trying to bring that academic connect. I think a few months back, we landed up having from Bangalore ISBR, and they will be coming back with new ideas as the new batch comes in. So there will be a whole lot of things. But one big takeaway from this session for me was we need to do scan of the environment globally to see are there new opportunities that we could kind of tap, which I think we haven't been doing that much of, so that we can kind of drive the conversation, including your thing on how can we support the MSME who are especially involved.
Especially environmental related solar.
Oh, yes. Yes.
And then agriculture side, FPOs,
Exactly. So we'll try and get more sectoral conversations also going. So watch out for more. Hopefully, we will try and keep it hybrid so that those who want to come and, if not, at least it's available virtually. So thank you so much. Eats outside. And Sunil, thank you so much, and all those who are on the call. Even though the numbers don't look big, you do have the YouTube thing. So therefore, it's never easy to get actually how many people join. So thanks so much. And
Thank you. And see you in September.
Yes. I had it from start. I think we are. We do want to get more.
Depending on the product.
Second interest of enhanced because there is a when you have cross-border transaction guarantee, trade finance, and the